Morning, guys. Hope everyone is doing well today. It's 9 o'clock in the morning right now. We have 30 minutes to the market open. I just wanted to cover my pre-market routine on days where I already know what I'm looking to trade for the day. On our next video, I'll go ahead and cover running scans to look for nice setups to trade for the day before the market opens, and I usually do these scans the night prior as well. So let's go ahead and get started here. So the first thing I wanted to point out, the start of every day, the one thing I'm always looking at is my markets watch list. And what I'm looking at is to see the net change, which directions the markets are looking to go for the day so far, and what kind of volume we have in the markets overall. So one thing to keep note here is that I always write down every day the volume for the Dow around 920 every day. But so far, as you can see here, we're already well over 50, and it's only 9 o'clock. It was over 50 already by 8:30. So this, to me, is a key information to keep track of because it kind of tells you, hey, we may have a pretty busy day ahead. Normally, the last couple of days, you would notice if you've been keeping track of this, that the volume on the Dow stays around 40s. It's been below below 40 as well on those choppier days. So this is something I write down every day to kind of let me know what kind of day we are looking to have. So this is the key area here. So as you can see here, I have the Aussie Yen, which is related to the carry trade. And then the E-minis, NASDAQ, the Dow, and the Russell. So this is the ones I'm pretty much paying attention to throughout the morning session here, pre-market, to kind of see, okay, where are we doing? How hard does the market want to move in one direction or the other? Overall, though, I am gonna say you need to remain objective because you know, even though you see the markets going down pre-market, does not necessarily mean that that is what's going to be for the rest of the day. So as you can see here, the Dow is at a key area potentially here. It's running into some resistance. It tried to break it multiple times here. It's failed here, and now it tried to recover all of this yesterday, and it failed. Right, so let's take a look at the S&P and see how the S&P is doing. So the S&P broke through its resistance, basically right here, this area here, all this area here, and turned it into support. It tried to break lower yesterday, the day before, and it just couldn't come back below this area here. So now, obviously, it's pulling back around 50% of this move. Potentially before it continue to move higher, or it may just completely obliterate this candle and continue moving lower. So again, this is why you want to look at everything, remain objective, but look at the bigger picture. Well, what are the daily candles telling me? Well, you know, we are, this candle is kind of telling me, hey, you know, the likelihood is that we are going to go higher because now resistance turned into support. So you keep that in mind and say, okay, well, now let me analyze what I'm looking to trade. Let's take a look at the SPY. Again, SPY, same pattern. Resistance turned into support yesterday, like literally right at the line. So you can see that. Follow that all the way to the left. See this? Perfect. Now, where is the SPY looking to open today? So far, the SPY is at 283. Pretty much doing the 50% retracement, or you know, some kind of retracement if you do the fibs, maybe the 38. But what I like about this setup here is this. Let's take a look here at the 10-minute. So you can see here, the 10-minute, the stock or the symbol is trading right around this pivot here, which is perfect. That means whichever direction it starts to move, it's probably going to continue that way. Now we don't have to worry about the pivot being an issue when it does break out in either direction. So I'm liking this setup here. So I'm going to go ahead and box it in for the morning. All right, and this is a good distance. So now once you see a break above or below this area here, this is going to signify, okay, this is the direction that we may be going. And once again, you're going to set your stop at the pivot initially, and then you're going to move your stop with the 30-minute candles. So again, we boxed it in, 30-minute chart here. Let's take a look. All right, the initial stop is going to be the pivot in either direction, and then your first target on the short side is going to be the pivot down here, And then obviously at this point I would not get today's expiration. I would get next week's expiration, just to make sure you give yourself room to run if the markets do decide to sell off today, because so far they have strong sell volume on the pre-market. But again, remain objective. Do not have a bias in either direction. That way you are more successful and don't miss out on a move higher if it breaks higher. And you remember, you can always get back in. So if you get in and you get stopped out and it decides to turn around, just go the other direction. Obviously, that is dependent on everybody's account size. If you have a smaller account, a cash account, and you use up all your capital, you may not be able to do that. But one thing I always like to say, hey guys, dip your toes. Just put in one contract at first. Wait for it to confirm the move and then get in again. So let's say we go long. It breaks here by 935, 936. It breaks higher. Boom, because it is probably going to try and close this gap. It's just what these stocks and markets like to do. They like to close gaps. So keep that in mind. You could even play this to the gap. So if you look here at the 30-minute chart, if this breaks, it may try to close this gap. Again, that's almost $1 right there, $1 move right there. So if you get in right on the break, you can get one contract and start getting dipping your toes. And then, if it starts to pull back, buy the dips and move higher. And your first target could be that close, because it will try to close that gap. And then if you see a pattern reversing, then you can say, oh, okay, let me take my profits, or let me close out that one and go the opposite way. But again, I would just hold it, because the plan is to go long. If it broke high, remember to move your stops accordingly. Don't jump out prematurely. You can play both sides when you have enough money, especially if you have a margin account. Don't hesitate to, hey, if you see a pattern forming, go ahead and enter again with one contract on the put side with a tight stop. Again, the stop could be the high of yesterday. And that's it. That way you're not risking too much, but you're not keeping yourself out of a potential move, and you give yourself that opportunity. Okay, guys? So that's what I kind of wanted to point out. Keep yourself objective. Don't have a bias in either direction, and always leave room for more. So always dip your toes and then layer in. Add more as things are confirmed. It's okay to pay a little bit more when the move is confirmed. You don't necessarily always need to buy everything at the cheapest, so long as the move, that the move is going to happen. But you definitely don't want to overpay for things either, so you want to make sure you're getting in on good patterns. Initiate your positions, layer in and layer out. I hope this was helpful, guys. I will, on the next video, keep an eye out for the next video. I'm going to add how to find setups on the pre-market and how to find setups for the next day at the end of the day. I'll see you guys next time.